Arrowhead Properties has released interim results for the 6-month period ended the 31st of March. Talk more on this. We're joined by industry veteran, their Chief Executive, Gerald Leissner. Good evening, Gerald.
Good evening. Nice speaking to you.
Well, you've talked about your A units and your B units. 15 cents the distribution there, and in the property language, that's the key number, the A units and the B units, and 9.68 cents on the B units. So take us through what's important about these results.
Okay, look, when we listed, we obviously did a pro forma income statement for the year, and obviously for the 6 months, we've performed according to plan. Our distributable income just under 50 million, and that provided the A units with their guarantee, and the B units just under 10 cents. So we're looking to achieve what we said we would achieve, which is 98 cents for the year on a combined basis for the A and the B units. So as far as earnings are concerned, that's fine. Our vacancies are up a little bit over what they were at the beginning of the period. We're obviously placing a little bit more, we're placing a great deal of emphasis on letting, and there are some challenges in that area. But operationally, it's certainly going according to plan. What has been exciting is that it's certainly internally amongst our team, we wanted to see if we could double our equity in the first year. We've got signed agreements, or certainly signed letters of offer for about an 800 million rands worth of acquisitions, all revenue enhancing. We're buying at around 11%, and we're paying our unit holders based on the market price around 10%. So there's quite nice upside, and all of that, of course, goes to the B units. We're acquiring good stock, and moving forward, that's really the intention. So we should end up at the end of the year with a portfolio of about 2.5 billion, and our borrowings will be about just under 30% loan to value. Yeah. So
Gerald,
it's going well.
Gerald, with me is Ashraf Mohammed. He's got a question for you.
Gerald, you speak about your A and B units. Do your A units have a guaranteed minimum that you pay out, and does it grow over time?
When you say guarantee, the A units get the first 15 cents a quarter.
Okay.
And then the balance goes to the Bs. Now well, put it this way, the A's get 50% of the distribution, or 15 cents, whichever is the greater. When we get to 30 cents distribution, then the A's and the B's will participate in the growth. But up until then, the B units get the balance after 15 cents.
Gerald, we were talking last night about listed property, and we were saying how it's been the best returns compared to equities since January, if you're looking at just at that measure, and also that the sector as a whole at an all-time high. You're an industry veteran. I think in one of the materials that they sent out to us talked about 47 years in the industry. You go back to Anglo-American Properties, Apex High, Redefined, and so on, Arrowhead now. What's your assessment of where that property market is now? You've got a big perspective.
You know, the key in the South African listed property sector is that your core portfolio grows every year, because you have escalations in your leases. Obviously, it depends on expiry of leases and that kind of thing. So, you know, there are increases in revenue stream. As long as the acceptable rate of return on the units remains relatively static, there should be a growing capital value to the units at the same time as there's a growing income stream. Obviously, if the acceptable rate of return, if interest rates change, in fact, then you know, it'll become a lot more challenging. But I think most people are relatively confident that interest rates are not going to go shooting up in the short term, and on that basis, one should be seeing 8 to 10% income return, and probably a similar return in terms of the value of units. So, you know, as long as interest rates, or the outlook on interest rates, is relatively benign, I think there's still steam in the market. So in terms of the physical markets, I think the office market is difficult. Retail seems to be relatively stable. Industrial market's quite strong. So it's, you know, I think that the property units are going to respond well this year still.